All right, guys, another Sunday scan coming at you for July 18th and the week ahead. Traders for a Cause. Tickets go on sale tomorrow for Las Vegas. Last year, we sold out in 24 hours. So, if you're planning to go, if you wanted to go, make sure that you buy your ticket. We're going to have a number of tickets for sale tomorrow, the early bird special, and when they're out, they're out. And then once we figure out how many sponsors, typically when you sponsor, you get a number of tickets. So we hold those for people to invite, whoever they're going to invite if they're a sponsor. If they do not fulfill those tickets, then we might have a few later on. But there's no guarantees. And last year, like I said, we sold out in 24 hours, and there was only maybe a dozen others that kind of freed up throughout. So if you plan to go, make sure you secure it. That's all I'm going to say. It's not a sales pitch. We legitimately sold out in 24 hours last year. And, hopefully we do it again. Markets have changed a little bit, to be quite honest. So who knows? But I still feel pretty good about it. Everybody looks forward to these events. At the end of the day, we're behind our screens every single day. And it's nice to meet up in person with the traders that you literally work with every single day. You go to work with them every single day, but virtually, right? It's online. And you don't get to see them in person. So it's always nice to shake hands and meet face-to-face with some of these traders that either you look up to or you speak with on a daily basis, you work with. It doesn't really matter, but I always have fun meeting new traders. And, like I said, we always try to keep these events rather intimate in the sense that if we had, 500, 1,000, 2,000 people, and we could sell that for a cheaper price, but it's not our goal. We want traders to be able to network and develop relationships that's going to help them, kind of build throughout their career. And we've had a lot of great traders come and meet others and become great. And, sometimes it's all about those relationships and developing those over time that are going to keep you in the game because it's important. It's a lonely gig. And, the more people, the more friends, the bigger of a network you have, sometimes the more fun it can be. So that was the first thing. Second thing is, as you guys know, I always like to give away free stuff. So on Trades 11, you've got the Icon meals this week, as long as you're in the U.S. If not, we'll figure something else out. But email me, webmaster@investorsunderground.com. As you guys know, Todd always gives me one box to send out every single month for Sunday video. That's what I eat every single day, and it keeps me fueled for the markets. And the last piece of housekeeping, hopefully you guys enjoyed the Lance interview. We premiered it on Friday. We had the link, and that will be in scan as well if you missed it. Very, very good insights, and we have part 2 coming probably within the week, and we will alert you on that. But he's helped a lot of traders grow. He is very well spoken. Some of the things that I try to say, he just can figure out a better way to say it. And very intelligent trader, very intelligent guy, and he's been there, gone through the motions, started with nothing, and became fantastic. And it's rare that people want to give back and share. And, I would highly suggest going back and checking it out, reviewing it, and see if you can pick up a thing or two or 10 or 20 or however many things you can get. But take notes. There's a lot of good information in there for those that care, for those that want to, further their career, who want to become peak performers. So there's a lot of golden nuggets, but it's up to you. So make sure that you take the time, put in the time, watch the video. And my goal is to moving forward with this channel. You guys know I do the Sunday videos every single Sunday, but I just want to provide good content. That's it. I don't really care about anything else except who can I get to share solid content to you guys, and that's really my only goal with this YouTube video or YouTube channel. And if you guys like it, great. If not, then hey, it was still worth it. All right, moving on to last week. So ILAG, obviously the big one. That was another one of those liquidation plays. All the action, you saw all the volume. Typically, my focus is on high volume trades. You have to be cautious because they like to do that little swipe and get everybody on their toes. So like we've talked about in the room, and I've talked with a few trader friends of mine, is the more people make on these, the more aggressive they will get. And I always, I could have done a lot better. I could keep on going bigger and bigger, but then you kind of become your own risk. And I'm not interested in that. I'd rather behave and be a little bit more risk adverse, and then start to scale it as I'm right, as I'm proven, as these names have gone to the point of no return. Then I'm interested. I'd rather be proven right and with a padding versus no padding and assuming that it has to happen. Because at some point, these little rips, 20 to 26 before they, unwind to 2, that could really send some people, to a nice little margin call. So be cautious on the front side. As you guys know, I always want to see that candle, the candle that we talk about, the exhaustion move, everything kind of come out and sit back and prove that, okay, it's not going higher. Other than that, couple fumbles, NVAX, it was the most obvious trade, just like I wrote on Scan. This is the most obvious sell the news trade. I feel like it's going to be too obvious that maybe it rebounds a little bit first and then look to fade it. But I got there a little bit and I covered because I felt like I was, kind of chasing the move, and went down another $12 or $15 per share. So, whatever. I fumbled it. I traded mRNA better, but at least the idea was there. But as far as me performing, it didn't quite work out as planned. Veru Siga, Veru Siga. All these different names, they're holding. We're in a market period, right, where it came down, everything just got squashed, and now money's coming back, and the stocks, the names are rising pretty quick, and they're trapping shorts because normally it'd be one and done, 1-2 days and then kind of done. Now they're holding, right? So you have to recognize when they're holding. You have to realize also that it's not just some small cap turd that has a PR and they're looking to raise money. Some of these are real companies. They are big companies. They have real funds behind them. Some of them actually have like Jefferies behind them, and different notes. They actually are covered by firms versus all these small caps that are typically one and dones. So for an example, ORMP had a great exhaustion move and got that trade. Once it failed, once it proved, continued to scale into that trade. We've got Veru, we've got Siga. They had great pullback days, but overall it's been getting absorbed. So the only edge on the short side again is if it has a parabolic move, has an exhaustion move, fades off, or the days that it's heavy versus VWAP, right? Any other day, you don't want to assume that it's going to pull back because you will get beat. Stocks do go up. And I know a lot of people have trouble understanding that, when we're trading a lot of small caps and they typically have 1 or 2 days and then they start to unwind, people have trouble thinking or understanding why is RYTM or TH or GOSS continuing to go up? And there's real companies out there. Stocks do typically trend up. We've just been in a bit of a downturn, a bear market, all the way around. And so now we've finally got some action coming back, and things are doubling pretty quick, and they're holding. So don't waste time. You saw on Rhythm, RYTM, you saw kind of like the hands-off approach, the key levels given. TH and GOSS, I tried each day. Just small. Gave the level, and it never breached the level, so there was no reason to scale into that trade. What I think's happening is people kind of add and blow out. Add and blow out. So let that happen and happen and happen. Don't let it be you. There will be a day that it pulls back. You set your price alerts, you be patient, you wait for it, and you'll get it. But if you keep on trying and forcing that trade, you will exhaust yourself out of the opportunity. And that's what I feel like a lot of people are doing on these. And just remember, when things should have died, should have pulled back and stayed heavy, and they don't, be aware. EVTL on Friday. EVTL had a fantastic opportunity midday. Newsletter came in, crowded it, and slammed down, right? And offered a great opportunity for cover. Then it started to kind of rally back slowly and slowly and slowly and slowly. And there was a couple people that were looking to short it in the room. And I said, I don't personally think that it's a good short. I would wait for it to exhaust out, blow everybody out, and then come back to it. And what happened is you see it just kind of slowly and steadily kind of grinds. That's where you get in trouble, when you're kind of like adding and adding and adding and expecting that it's going to come back. Because what happens is that slow grind is either going to end in a random kind of exhaustion move, or it's going to start to speed up at the end. And if you've been adding and adding and adding into that slow action, you're going to get blown out into the parabolic at the end. So for me, it's just hands off. Just let everybody else figure it out and then come back at it. You know, there are times that I dabble and I want to get a feel for it, but you don't want to get on the wrong side of a crowded trade. And, you know, that's a perfect example of one. Then there was another one on, what was it? NEXI. NEXI is an example of, you know, the crowded small cap where, yes, it's an obvious short, but it holds a flat line and then the cover comes in at the close and then it starts to come in, right? So if it's too concentrated on the short side and then it does just enough to support, then that cover is going to come back in. The move's usually a day or two later. So just don't take it off radar, but recognize if it's not breaking lows that, you know, you probably should be a little bit more proactive with covers if you are trading for that backside. And just remember, it's free, zero risk to let things prove, right? So a lot of times people are afraid of missing things. And so GOSS and TH, I gave levels all week and we went over it. And GOSS even broke under that level. But one of the key concepts that I went over this week in the room was, do you know if it's shorts that are pressuring it or do you know if it's sellers, right? And when I am interested in getting in there and sizing in and scaling in, it's because it's sellers, right? And how do we know the difference? Sometimes we see these walk downs, right? And then when it comes back up and tests, it comes right back through, right? So all that pressure that was coming down was likely just shorts. And the first time that it retested, it reclaims prior resistance or prior support that became possible resistance, but no, it reclaimed. And so just throw that into your kind of thought process where when you see things break key levels, you want to see it come back and retest, back and retest, back and retest. And you'll see that the tape starts to change. It starts to get heavy. It starts to thicken up on the right side of the level 2. And when it was trading like really jumpy before, you'll start to see it just starts to get a little bit more pressure. And it's not as jumpy. Instead of jumping up 5, 6, 10 cents at a time, maybe it pops 1 or 2 cents, you know, with a lot more volume. That's what you want to see. And I'll show you guys on GOSS, GOSS, and TH, the same thing. We talked about it live where, you know, if anybody was short, if this level holds and reclaims, you got to be cautious. And they did. They held. So that was the first topic that I wanted to cover. It was the shorts or sellers. Understanding, seeing those channels. TH has been in a channel for quite some time. HTGM, same deal. We talked about the channel, 120, 130s. And then if it proves to be, you know, above that level, then, you know, you don't want to fight it. So conviction from bigger picture. I feel like a lot of people don't take into consideration the daily. You know, I don't just use 1 minute charts. 1 minute is what I look at intraday, but you know, I'm looking at the whole thing, the daily and key levels and things like that. So when you are making decisions, you know, kind of zoom out a little bit. And what I told the room this past week is sometimes, you know, I'll take a trade and, you know, I assumed that maybe it was going to stuff and pull back, but it didn't, right? And then I do it again and it didn't, do it again, didn't. And I'm kind of just trading, I'm scalping. That's never my goal. So after 2 or 3 times, usually I just say, you know what, hands off because it's not doing as I expected. I'm going to wait until it breaks down under key support to participate. Otherwise, these are the types that usually will cause you to add and add and add and blow you out. So take those signs. If you are finding yourself kind of scalping in and out, in and out, in and out, you know, for me, I'm always looking big picture. I'm not looking for like a quick little move. So just kind of keep that in mind. And then once again, just remember, no trade is okay. I've been sitting on my hands a lot out of the open, and you'll be amazed by the clarity that comes a little bit later, 9:45, 10 a.m. plus. If I am taking trades prior to 9:45, 10 a.m. plus, and they flush, I'm on the bids. If they break out, I'm on the offers until they start to figure out which way it's going to go, whether that's steady down, steady up after 10 a.m. But there's edge prior. But what happens is if you take your bias and try to force it after 10 a.m., figures out which way it's going to go, and you're on the wrong side, that's when you get run over. So let's get right into scan for the week ahead. All right, guys, so for the second part of scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. These are for informational and educational purposes only. If you're not okay with that, shut it off. If you're okay with that and you want to learn how I prepare, what I look for the week ahead, and sort of the thought process in getting ready for the week, then you're in the right spot. Like I said, I wanted to go over a few things on like this GOSS, for example. We talked about key levels and, you know, kind of not getting trapped, right? And so the conversations that we had in the room, we had this nice little pullback over here, and I said, you know, finally broke that key level, prior level of resistance became support, and then the support cracks. But how do you determine if it's shorts pressuring it down or if it's sellers? And as you see, it came on, you know, an unwound. So I always like to be proactive with covers in a situation like this. And that's exactly what I said in the room, because we don't know if it's going to stay heavy yet. And stocks do pull back along the way before they head higher. That's normal. They shake out the week, and sometimes they'll go one more leg down to, you know, maybe get some stops before they ultimately head back up. But how do you know if it's a short or shorts pressuring it, or if there's actual sellers coming in? And so you've got this dip under, whoops, pulled the wrong line. You got this dip pulled under VWAP right over here, comes back, consolidates right here, and then it rips right back through that key line given with no issue. So right there, you know that you don't want to be scaling against the trend. You always want to assume that it's going to come right back through. What I want to see is either it retests this prior level of support and it becomes resistance, or it has trouble at VWAP and it becomes resistance. None of those two things happened. So you need to be cautious and hands off. And you saw the same thing happen with the key levels on TH. We had a similar situation where it kind of went under it. And, you know, we had 1190s, and, you know, you can see the channel that was kind of forming. We had another channel over here, and we had another channel over here. So you can see that the channel, that prior top becomes the base. This prior top becomes the base. Then it finally cracks, but as it comes back under and it reclaims, look, that level starts to hold trend and away it goes. We had the same thing on HTGM. HTGM we talked about at the 120 to 130 level, if I can get back there. So we had this big day when it had the, right here, 130 and 120. So this was the day that it was heavily promoted, and a lot of people got on the wrong side, and then it came all the way in. And if you look back, you can see it slowly came back, and once that 130 became top, it's held ever since, even on this flush day, right? So now shorts are kind of in a bind that have been adding. And like I said last week, at this point, you know, ideally we get a 220 type blow off, but these are like those liquidation style walk-ups, just like YSG, just like CLEU, just like BLBX, So, there's a lot of recoveries, and it's not something that you want to jump in front of, but you have to wait for it to speed up. There has to be a gap up and some huge exchange off the open. Then that was probably the promo day and that they, dumped. Or you have to wait for it to speed up relative to prior price action, which is why I said last week 2 to 220 would be, ideal. But, you can see the shakeouts and the wicks. We talk about the wicks every week on Sunday video. You can see how the wicks start to firm up there. So anyway, Veru and Siga, pretty much the same charts. They're just perma watches for me at this point. Every day has good range. Every day you can see the dips get soaked up. I don't really have a bias. The two things that would lead to an edge for me is if it's heavy after 10 a.m. under VWAP, I would love to join that trend down. Or if it blows off, some sort of parabolic move like ORMP this week. We had a huge trade on ORMP where you can see the candle here. We had that blow off day. So too many people getting on the wrong side, the wrong time, blows out the size. You can see this sped up relative to prior price action. So it's slowly grinding, and then it just goes straight up. At that point, you have an edge, and you can start to see, just like we talked about, you've got this little channel kind of forming, you've got this support forming, and even that when it comes back and rechecks, it fails versus the VWAP and continues to unwind. So we had a really nice opportunity that day just by being patient. But this is the edge on stuff like Siga and Veru. If you're trying to find the top on those slow grinds, then you're just going to keep on getting chopped up. And once again, remember, stocks go up. Too many people think, everything that goes up, it's gone up too far, it has to come back. And just because maybe I'm watching for something for that trade does not mean I'm short biased. Dips is the more they hold, and week open, red to green, can continue to break out. AMC's been a good trader every single day. Its same levels have been working, 1490s, 1520s. I had a really good trade going on Friday, but then I ended up scratching out on it just because I put on perfect off the open, 1520s rip, and then I sized in, went all the way down. 1490s stayed heavy, 1470s. I was like, all right, we're under 1490s. I'm going to be patient. 1490s reclaimed, and then 15s, and unfortunately scratched out of the trade before I left. It had a nice little power move into the close. You can see that the wicks are definitely getting bought up. So, there's definitely demand still there. It's still a very popular name. But look, as long as it has this daily action, I'm going to continue to trade it. But you can see here, low 1473, low here 1470. So now, as far as a big breakdown, your level is 1470s. And the reason for that is looking big picture, so that, middle of the day, you see a big fast pullback, but it's holding, trend, that's not the day that it's going to turn, right? You can be patient. You can wait for the 1470s to crack. And you can see that the prior resistance is now becoming support, which is important when you're trading these types of names. The good part about AMC is you can trade it every single day if you wanted to, just like NEO, just like LI. But you have to behave. And every time that I get a little bit more biased, if I think today is the day and it's clearly proving that it's not, those are the days that I either turn a good winner into a loser, a good winner into a scratch, or just fumble the trade altogether and miss it because I second guess it. So other than that, other main watches, TH, higher the better. And, this is, again, they had solid news, which started this entire thing. So I would not, think that it has to do anything. I would not think that it has to pull back, but we know the prior levels, the key levels from the prior days. I always recommend charting those from the day before just to kind of remember it. Then in the morning when it flushes and it holds that level, hey, it held yesterday's support. So that should be either a proactive cover or wait until that level breaks down. And I think that would help a lot of people by just waiting for prior days, support levels to be breached and then fail to follow through. So TH will be, a perma watch for me, just like RYTM and just like GOSS, but I'm interested because there's huge range, but I am not interested in just trying to figure it out. RYTM absolutely is running over shorts. Anybody that thought that it, should pull back, needs to pull back, doesn't make sense up here, is currently buried. So be patient. EVTL would be the only other one for a main watch. So I think they did a pretty good job of squeezing out traders. There was really great opportunities in the room on Friday that we talked about. We had a nice exhaustion move right over here, and then another one right over here, and then a newsletter had come in, and a couple minutes later it just came apart. But we talked about covering. Then you can see the wicks getting bought up, this dip and rip, and then it starts and reclaims VWAP. So once again, this is another example of you have time, right? If you had a good trade, but you've got time and it starts to hold, and you can see the wicks right over here soaking at VWAP, and then you even got a little bit more time. But if your bias gets in front, you're going to be covering up here, right? So you can see how much time you actually had and how much time you had to process and how much time you ignored the trend if you got smoked. But you got to recognize after it flushes, this should stay heavy, right? If it's going to fail, you should have maybe a 360 area acting as the top. But if it starts to grind and the pullback comes back, retest holds, comes back, retest holds, you have to recognize that. And if you don't, you're going to end up getting squeezed. And that's just because of a bias and thinking that you're right. And then you've got that channel again over here. Anytime there's a channel like this, I always like to recheck in. If, I was gone at this point. I was off the desk for the day. But, a channel like that I look for, just like you saw on GOSS and TH. And I always ask myself, am I sized in too much for this given setup? Because it starts to become 50-50 at that point, right? The more it consolidates, is it going to break out or is it going to break down? So you want to readjust. Okay, if it does break out, do I have too much? Where either A, I'm going to get stopped out, or B, I'm going to be emotional into a key level. And I never like to have an emotional attachment into a key level that it needs to test. Because otherwise you're just going to be 9 times out of 10 probably covering into the resistance, and then you're going to be, upset because it pulled right back off that level. So I always try to make sure, recheck, reevaluate the position size if we start to go into some sort of sideways consolidation. Next up is failed follow through section. Next E, same deal, same thing that I talked about. So, you've got, up, down, up, down, up, down throughout the day. In my eyes, super, super crowded on the short side. Probably rightly so, though. Like, it should have pulled back. But everybody's thinking the same thing. It does just enough to hold. They cover it into the close, and then, there's no bids. So, in the morning, I would expect like a gap down, but watch pops verse 2, and it could be one of those quiet type unwinds, ideally. RYTM, I think, just squeezed out all the folks that were trying to force a trade. Looking back, you can see, it comes back. Same thing we talked about with GOSS and TH, where you've got this breakdown, right? So you've got this 870 support or so. Let me just look back here to put a proper line. So I'll be right about there, 910 or so. But you've got that check-in right under here. How do you know if it's sellers? How do you know if it's shorts? Well, it should have stayed heavy at this 880 level. And it didn't. It got right back through, and it actually came down and retested, and continued to hold, right? And then it bust through, and I got to move this a little bit. Move this up. There we go. And then it went back, retested, and that prior resistance became support, and then the squeeze begins. So all the writing is on the wall. And, these aren't I told you so's. I didn't trade them. But it's there. I'm showing you the patterns to recognize so that if you are on the wrong side, you have time to get out. It's most of the time, if I lose in this situation, it's because I'm personally being stubborn. I see that setup. I see that it should have died. I see that it's grinding slowly, but I'm too proud to go ahead and move on. I think I'm right. I think that, I was right, but now it came back. Well, I'll give it a chance. Let's see what it does. Famous last words. So you want to be hands off at that point, or at least be extremely small size. As you guys know, I always like to have a little bit sometimes just to be in the trade, to be really, really focused. CLNN, higher the better. There was a couple good squeeze outs. I think that this ends pretty badly, but at the same time, it had good volume. It's a bio name. I do think they're getting ready to raise, but that doesn't mean anything if it's crowded, right? So it had a nice pop, and we talked about this. We talked about this channel right over here. So 470s was the number that we were talking about in the room. Whoops. 470. And then 450s was the level that I wanted to see basically stay heavy. So you can see that, and I guess maybe 460s if you want to call it that. But I always look for those channels. And you can see that there's a little bit of exhaustion level. I mean, there's a huge seller, the 475 range. If you zoom in, you can see each wick sits back under 475. So that's what, in my mind, I'm watching, and I'm saying, okay, there's a seller here, but that doesn't mean that it's a short. I'd rather see it start to fail off these levels and be, proven right, because if this ends up being a short at 475 and they break through it, then what's going to happen? It's going to go 525, 550 real fast. So I always like to see it confirm, break down a little bit, and then start to risk off those levels before just assuming. So you saw me kind of right in the room. There's a notable 470 seller, but I want to see failed follow through and confirmation, just because, as you've seen, it pops up pretty quick. So at this point, any gap up, any good push towards 460s, which was the prior level of support over here, I think could end up being resistance. And if that's the case, I'd be looking for the fail from there. But pretty steadily trending. And also, we talked about 380s and 360s being the channel from the day before that you wouldn't want to fight above. And you can see that after all this, even going up to 5+, it came down and it kissed that prior level, which was 380. 380 to 360 was the channel on scan. So again, how to stay away from getting in trouble. Draw lines. GOEV. Another one that I feel like was super, super crowded. It's the obvious trade. The filings, they're almost like a DRYS, DRYS, where they have an equity line that is based off the 3 days of the VWAP, blah, blah, blah. Don't quote me on it. Go back, read the filings. But when they're ready, they're just going to have endless paper. And for now, it's an obvious, it's obvious that it's about to happen. Just what's the timetable? How many more PRs are they going to pump out before, they start to sell? So I think that Friday was sort of that working out the oversized, the folks that, it's the obvious trade. Actually, what I was looking for on NVAX on whatever day that was, the sell the news day that I was looking to trade, I was hoping that there would be a process of working out the obvious trade before the unwind, but it just unwound. So anyway, I think that this was the process of unwinding the obvious trade and then nice fail. I did keep some over on the short side. And the only reason I wouldn't keep the whole thing over is, number one, the volume. Number two, they like those pre-market PRs. So in my opinion, I want to have that buffer. I always, anytime that I swing something over, it's not anywhere near the size that I would take intraday because, once again, I'm hopeful that it goes higher. If you're short, why are you hopeful that it goes higher? Because I've got a partial position. I want to scale into it. I want that good opportunity to be able to take advantage of it. Same thing like ILAG, for example. This is an example of, higher the better in the morning, right? Nice little shove up to the 850s before it came back in. I didn't participate, but if that was on scan and I was short, I would want that opportunity to rescale in the next day because I don't want to take full exposure on throughout the, overnight. So moving on, continuation, ILAG. I think, I was looking to trade if 240s pretty much firmed up, but they decided to wait until after hours. So I'd be watching. I do think that, look, this thing's going to probably end up under 1 very soon, but right now it's a trading vehicle. So it dumped, everybody plays the bounce, they get screwed, then the shorts come in, it rebounds, it fails, it closes really, really weak, and then after hours it goes. So now they've got shorts on their toes, it'll blow them out, and then probably fade back off. So we should have a trade there. I don't mind trading it long if it sets up and it gets trappy, just like LYT. Same kind of situation that we went over there. FFIE, for those that were watching a video scan last week, really nice breakout. I have very minimal left. This was one of those that should have died. I had a nice short this day, and then I was like, this thing keeps on coming back oddly well. It's holding oddly well. The writing was on the wall. That's why you saw me get long, and, really, really nice breakout. I sold pretty much 90% of it this day, and then I just have a small portion left. Other than that, SKYX, nice daily chart. These are the daily charts that I look for. Nothing crazy, but you see the wicks. The volume's small though, so it's not something, I was interested in it, and I got some off the dips early on, and unfortunately it's just a partial positions. So it is what it is, but just be cautious chasing this up. It had some action after hours, but you don't want to be chasing low volume. And these are the types where you feel like you missed the trade and then you chase it, and you could have just been patient. Wait for the opportunities. Same thing for something like SOUN, same setup. I look for these kind of things. No position on this one, but same sort of setup that I'm looking for. Same thing on VRM. Same kind of setup where you've got that initial move, and then you can start to see that there's been a buyer in the tape since. So I always look for the volume candle, right? We've got the volume here, and then there's been a buyer in the tape since. So these ones all I have no positions on, the VRM, APRE, and SOUN, but similar situations, looking to get involved if they continue to prove. Same thing, MREO. I actually had a swing on this for a while, but I bailed. But we're back up at the highs, and you can see, you've got that transition day, and then it starts to get bought up. And same deal, with all of these. Like transition day, in my eyes, the way that I kind of use that term is you've got all these new buyers buying from everybody that finally got bailed out. Maybe they were bag holding, they finally sold. You've got all these shorts that come in, and then as the process, the move doesn't happen that day, right? All the shorts come in for the unwind that day, all the longs come for the breakout, and then it just kind of does nothing. And so then over the next couple weeks, you start to see it get bid up. And that's what drives my interest on situations like that. Also, just a random one, but IINN, where you have that transitional day, and then the dips get bought up. And if you look, 202 was the low, 202 was the low, 204, 206, 208, and then they keep on building it up and up and up. So there's an obvious buyer that's not letting shorts out. And so this one stays on watch, but until it holds over 265s, I don't really care. You want to assume that, any blow off over 265 is just an exit. But that's what I look for, those dips getting soaked. But that's about it. Nothing crazy on the long side that I'm super, super excited about. But, they're definitely out there. There's a lot of good charts. And, I've been getting long more. We've had some good swings, but it's just something that we need to be patient for. Setups 9:45, 10 a.m. plus, and hopefully you guys have been doing well. One thing maybe this week, leave your key takeaways, but if you have questions for next week, if you have a couple of questions that you'd like me to go over, write it in the comment section. I'll probably pick a handful of questions that you guys send in and try to cover them on the week ahead. But Again, don't forget, Traders for Cause tickets go on sale tomorrow. 100% of proceeds go to charity. It's not a for-profit event or anything like that. It's just a bunch of traders getting together to do good. Yeah. If you didn't watch Lance's interview, now's the time. There'll be a link in the description as well as the blog post. All right, guys. Have a good night.